first off, your thoughts on what's happening over in Europe, especially with this meeting between Nicolas Sarkozy and Angela Merkel.
Look, in our view, the situation in Europe is much worse than what's happening over the rest of the globe, most notably in the U.S. This issue in Europe that you're facing is the policymakers have yet to really implement any sort of credible plan. All they're doing is talking about this quote-unquote vision that they have. Well, my question would be, what is this vision? Are they going to leave us sort of on pins and needles until the end of the month, until we can actually see if they're actually going to have something credible to backstop the banks as well as save some of the sovereign nations? So I'm a little bit skeptical as to these continuous meetings that they're having, because really we're just getting some sort of sound bites out of these meetings and nothing really credible is coming out.
Nick, good morning. It's John Dawson speaking. I just want to ask you, they said they're going to fix Greece, recapitalise the banks, fix the euro, all in 3 weeks. How realistic, therefore, is that, based on what you just said?
I think it's a pretty tall order, to be perfectly honest. I mean, they've been unable to fix the problem over the last couple of years, so I don't really have any sort of confidence that they can actually get something done in the next 3 weeks. If you think about the situation that they have, Greece is obviously number one, most important. But equally important is the other sovereign nations, most notably Spain and Italy, which have even higher debt burdens and would have bigger knock-on effects to the European banks as well as to the global economy. Next up, you have the European banking sector, which is also sort of in shambles. You've had Dexia have issues, and I'm guessing there's going to be much more pressure on the European banks going forward. So really, they have quite a bit to do in a very little amount of time.
Nick, one more question to you until we'll see you for the next few minutes. But what about what happens in the U.S.? Seems like investors are discounting all the good economic news that shows that the recovery is still intact in the U.S.
The recovery is sort of meandering along. We've had some decent data come out of the U.S. The payrolls numbers came out, and it certainly wasn't great, but it wasn't as bad as other people had expected. We've sort of likened the U.S. situation to being the best horse in the glue factory. So they do have their issues, but the policymakers are taking steps to fix the problem. Some people argue that they aren't necessarily the right steps, but in our view, they are taking steps to create jobs as well as decrease the deficit. So, the likelihood of the U.S. entering into another recession is likely. The probability is increasing as continuing data is poor, but it's nice to see some decent data come out over the last week, and most likely we'll see some more positive data come out in the weeks to come.
Nick, let me ask you this. You said that this recent rally could have some legs. What are you seeing?
We're seeing the recent rally may have some legs maybe for the next month or so, unless we see some big coordinated action coming out of Europe or something that's really going to change our view. We think that a lot of this rally will be met with people sort of increasing their cash positions, also getting a little bit more defensive. If you think about the U.S. situation that they're having, yes, things are gradually improving, but the recovery is going to take quite a bit of time. Our view is that expectations for growth are probably going to be around the 1% level. The things you really need in the United States to get a full-blown recovery are going to be continued job growth and some sort of fix to the housing market, and that's going to take quite a bit of time to fix.
All right, but you're not expecting financial Armageddon, are you, that markets have been pricing in for the last 6 weeks or so?
No, we are not. The markets got extremely bearish over the past month and a half. We think that as markets do, they tend to overshoot themselves, and then the market was met with some above expectations data, be it payrolls, as well as some warm and fuzzy talk out of the EU about the banking sector. So ultimately, like I said, the rally will likely continue. Interest rates, at least from the U.S. government bond space, are probably going to be under pressure over the next week or two. But you'll see people sort of increase their positions as rates move up to a more viable level.
Okay, Nick. Now, earlier on in the middle of September, we were talking to the other co-founder of Kapstream, who predicted maybe 10 to 15% more downside for equities. At this point, do you think we've already seen the depths for this year?
I think that there's going to be further pressure. I would echo what my colleague said earlier last month in the sense that the markets will continue to deteriorate. I think as markets do, they tend to bounce around. They're not going to move into a steady upwards trend or a steady downward trend. So, you know, you've seen a big rally over the past week in developed market equities to the tune of 9%. Emerging market equities have moved up 14%. But I think people are going to use that rally to get out of risk assets and get defensive, like I said earlier, because I think that there is more issues to be had going forward.
Okay, Nick, things to watch out for, say, into the next 3 months till year's end, because we do have China coming back online. And don't forget, we have Q3 earnings season starting Tuesday in the U.S. with Alcoa reporting.
Yes, the earnings season, I believe, is going to be mixed. I can't imagine that it's going to be a stellar earnings season. Corporations have deleveraged, especially in the U.S. They aren't necessarily increasing on the job front, but profit margins are doing much better than what they were 2-3 years ago. The European situation, I think, is what to watch over the next few weeks. We do have the big announcement coming forward at the end of the month with Sarkozy and Merkel saying that they have this quote-unquote vision to implement. So, again, we're a bit dubious of what they're going to say and how they're actually going to fix the problem over the next 3 weeks. But I certainly think that the bright spot in the global economy continues to be Asia. So we would encourage investors to stay nimble and stay cautious and focus on those countries and corporations that have strong balance sheets and are poised for growth.